Good morning, everybody. Mike Vacchi, PrincetonTrader.com, here for NTMarkets.com with your Thursday morning pre-market webcast. Okay, S&P 500 E-mini futures. This is a 5-minute chart just to kind of illustrate what's been going on in the overnight. We got to the close yesterday, and you had a fairly large washout of the bulls. The bears really ran the market down. We made a high first thing in the morning up in the 86, 87 area, and we never really looked back. They sold that morning high. Now we ground around in the middle of the day, and at that point we dump out, chop, chop, a little bit lower, and then we start to see this slow ramp. We broke out over the daily pivot, tried to do the monthly pivot, and we failed. And that was a pretty hard fail. We failed to the tune of 40 handles, broke back below the weekly pivot, and we're trying to deal with weekly pivot now as resistance. As we get out here on the daily chart, you're seeing, you see the move down to 1831, bear market rally, potential high or low, and you're seeing just this kind of slow drift higher. But if they being the bulls, cannot take out mid-band here or here, you're going to see a slip back down. You're going to see 1907 tested, which is the potential matching floor from September the 2nd, September the 4th, and then a move down potentially to 98. If that breaks, it opens up a test of the lows. So the bulls find themselves on the edge of a precipice here, and they need to start to fight back. And it's hard to fight back after you lay down for 40 handles in Globex. But I remain fairly convinced that a huge point of the last couple of days is to try to shake out as many people as possible as we head into the roll. They shook out the bulls, they shook out the bears, and they just, everybody's getting shaken out in these, big moves. That's a big round trip of the 1930 area in the last, 12 hours. So as we head into the regular session, I'm looking for a pop. I'm looking for that pop to be sold. Because as long as, being down here, we've talked about it for years. We're below mid-band. We're below the 200-day exponential moving average. That equals sell rallies. When we're above those areas, we buy dips, but your general rule here is to sell rallies as long as we're below the green line. That's been a mantra that we've used ever since I started doing these. So that's my basic, outlook as I head into the day. All right, everybody have a good one. Follow us on Twitter at Princeton Trader. Check out the website. Come check out the chat room, and come join us after the close today, 4:45. We're going to do the weekly webinar is today. The sign up is included in this post. It'll be up on my Twitter. If you attended one of these before, you should have gotten an email. Lots to talk about. So come join us, and I look forward to a really cool webinar. The Q&As we get out of these are just amazing. So come check it out if you hadn't checked it out so far. I'll be back tomorrow morning with another webcast. Trade 'em well, everybody.